Nasdaq and Senator Warren are going head to head in the crypto fight, and we'll see how this plays into the markets, what this might mean for both short term and long term. You guys don't want to miss this one. My name is Paul Barron. Welcome back into Tech Path. Let's go into a couple of topics here. I want to hit on our sponsor, and that is Tangem. If you guys are looking at going into self-custody, this is one of the options you can go with, and it's my preferred option in terms of a wallet. And the way that Tangem works is it's kind of like a little credit card for you guys that are just entering into this. You need an app. Their app is super slick, and you have the capacity to use that card as your secure device. Now, there's one way you can go into this, and that is go with the 3-card set. The 3-card set will give you a backup, one to carry with you, so you've always got kind of a secure way to hold your crypto. And this is a cool thing because they just introduced swaps now available on the card itself. So check it out. I think you guys will like it. Use our link down below. Let's get into a few points here. I want to hit on this first story today. Nasdaq's financial crime report revealing $3 trillion in illicit funds flow in 2023. Only one problem. There was no mention of crypto. So, man, you can imagine what that meant for Miss Elizabeth Warren. Within the article, Van Eck raised an intriguing point. He suggests the report's omission of cryptocurrency implicates that mainstream financial system as the primary conduit of these crimes, as opposed to digital assets. This, of course, was Ardoino from the CEO of Tether. He emphasized that he needs multilateral cooperation, effectively combating these illicit activities. Mainly, Tether is cooperating with a lot of these agencies to be able to kind of deal with these scammers out there. So that's a good thing, I think, in general for crypto. Overall, eventually, I think Elizabeth Warren does not have the firepower in the army that she needs with all of the things that we've continued to see. Further in this was a chain analysis, I should say. Blockchain transparency, albeit not entirely foolproof, plays a crucial role in deterring outright criminal activities. With the crypto space, this means everything's open and on the blockchain, makes it much harder for the bad guys. So that's the cool thing there. A couple of tweets I want to hit on. This, of course, was Senator Cynthia Lummis. We've talked about her before. She's responding to Elizabeth Warren and saying fiat currency has laundered over 900 million compared to only 900,000 in crypto. Crypto is clearly not the problem. We got criminals and bad actors. They're the guys that really are the core of the issue. And this is something that we always have had, the ability to go out and do that. That's why we have all these federal agencies to go and combat these international and national crimes. So hopefully they'll start to get the idea that Wall Street's in on the gig now. They actually like the idea of blockchain and tokenized securities. A couple other things. This came in from GR Dector, hitting on what's happened just in a couple of weeks here. We got S&P hitting all-time high. I mean, look at this, crazy numbers right now. Stock market, of course, is beating earnings, including Netflix. We saw Nvidia go to an all-time high this week, just yesterday and today. Big layoffs still set to boost a little bit of this. I think we'll see more companies that will reposition their situation. Overall, Magnificent Seven, now 28% of the S&P 500. That's probably not that healthy, but the fact that tech continues to lead the way is a good thing. U.S. cuts rates on the horizon. This, I think, is going to be a big deal because this potentially could jettison a lot of money that's sitting over in these money markets. In fact, $5.9 trillion that could be poised to come into the markets, which could go into crypto. I'd love to know what you guys are going to play with. If you're holding money markets right now and you're saying, okay, I'm going to hold this 5%, but once that I feel comfortable with a rate cut and we have a market pivot, where would I go in terms of risk assets? Let me know down in the comments below. Would you go with ETH? Would you go with maybe a premium altcoin like a Solana or an Avalanche? Or would you go into gaming? Or maybe really go into some of the DGen projects? Let me know. Drop some comments. Let's go into a couple of clips here. This, of course, is Mike McGlone talking about the direction. And he breaks down how Bitcoin is performing in the stock market. So this is very interesting to see Wall Street talking about this right now. Listen in.
The launch of Bitcoin ETFs, spot-based ETFs in the U.S., was one of the most extreme speculative frenzies I've ever seen in markets. It's also coming with the stock market all-time highs and the potential world hailing towards recession. Certainly have a downtrend in global GDP forecasts, and the U.S. certainly heading that way. And we haven't started easing rates yet. I mean, at least the U.S. has, and many major country has, and typically takes a long and variable lag to easing. The key question I like to ask people and investors and anybody in this space now, do we really expect this highly speculative 24/7 high beta risk asset to outperform beta, meaning the stock market, even to go up if the stock market goes down? And to me, that's going to be the big test this year. I think the U.S. stock market is going to go down for a normal recession. Commodities are clearly in a recession. That's my main space. And if that's the case, the leading asset on the way down in 2022 was Bitcoin. The leading asset on the way up in 2023 was Bitcoin. And the risk is it just goes back down.
All right, so his point, and he's been a couple of spaces out there talking that maybe the recession is actually looming. But when you look at the indicators, I mean, yes, we are and have been up, almost up only for quite a while. So the real question is, did we already enter the recession? Do we already see these rate cuts and pressure on the market? We saw slowing of jobs. We saw a lot of inflation. We saw a lot of companies cutting jobs. And we saw a lot of, outside the tech, Magnificent Seven, a lot of mid-cap stocks that really took a lot of heat, including commodities. So maybe has that been already the case? I'd love to get your feedback. Now, he goes further into this about talking about, is Bitcoin mainstream now? Because this would also kind of combat, I think, his own position that he was talking about. Listen in.
And that's a key thing people have to remember about Bitcoin now. It's in the mainstream. It's not going to trade with the kind of volatility it has in the past, and it's going to probably trade more like equities than gold. And it hasn't shown, like I said, last year, all risk assets were back up and Bitcoin was just back up with risk assets. So as far as interest rates, that's the key thing right now. In the macro, the market's priced for so much ease, which will help keep the stock market elevated. I don't think it's going to get that ease unless the stock market goes down and makes them ease. And that means that's a pressure factor for this highly speculative 24/7 leading indicator risk asset called Bitcoin.
So a couple of things he hits on here that I've talked about before is that once the ETF happens, we would see a little bit of a pump. We saw that in the pre-ETF run-up. The question would be whether or not Bitcoin holds out. And meaning, does it continue to see the volatility, or do we see some stabling of the Bitcoin asset? I feel like over time this will occur, but the real test is going to be the halving. I think once we see the halving, and how the ETFs respond, but also how the market responds at the same time, because of the ETFs and because Wall Street continues to put so much into Bitcoin, that I think will be the telling factor as to whether or not this is truly going to see the volatility in the coming years that it has in the past. So we'll be watching closely on this one. Now, he talks a little bit more about the Fed adding more liquidity and what this might mean for the markets. Listen in.
Do you expect more liquidity to be injected into the market by the Fed this year?
No. Exactly. So that is probably right. But remember, we have to be careful measuring 15 years. Most of it was just a nascent asset. The last 5 years, a little more relevant. Money supply is still tilting negative in this country. Interest rates are very high. That's a major headwind for Bitcoin, particularly gold, the more mature version. And like I said earlier, liquidity comes from the Fed starting to ease. The market's priced for so much easing this year, I think it's silly. It's priced for way too much liquidity to help save them. And Bitcoin will suffer, gold might suffer initially, but I think gold will come out ahead. That's the problem right now.
Interesting analysis there. He talks further into Bitcoin and gold here because that's one comparison now. You look at Bitcoin being the new digital gold and how that might play out. Do you look at Bitcoin right now as a long-term store of, assets? Is that something the way that you're playing the market? Let me know. Just drop some comments down below. If you do like these kind of videos, make sure and smash the like button. I want to go to this last clip because he's talking about Ethereum maybe playing a little bit different role here in terms of a truly skyrocketing asset. Listen in.
Gold is traditional old school store value. It does not give you a return. And the competition right now is a US T-bill at 5%. Bitcoin is digital gold, but there is no return. So we're talking about marketing this product to entities in the past that have all been focused on equities and compounded returns. And they're supposed to get over that hump that they've already passed on gold for this. Good luck. Now, that's where Ethereum might have an advantage. But Bitcoin has no earnings, like gold has no earnings. And that's why traditional and the essence of compounding returns over time is you want earnings.
Yeah, and obviously, if you're watching earnings that's staked ETH of course continues to fly up the charts in terms of staking. And I think the performance of Ethereum, as we see this asset really start to position around an ecosystem, which is going to be in everything from payments to gaming to retail, loyalty, et cetera. That'll be the thing that really kind of sets this apart. Now, James Seyffert was on Twitter. He talked a little bit about more of why we're continuing to see some pressure on Bitcoin. He's talking about the update for the ETF Kentucky Derby. 515 million came out of GBTC yesterday for a total of 3.9, let's just call it 4 billion in outflows since converting. The 9, this is the remaining, we'll call them the Mag 9, saw 409 million in inflow. So are we seeing a direct one-to-one inflow? We don't know that that's necessarily happening, but what we do know is they're continuing to climb. GBTC is continuing to decline. Now, Eric Balashunas added in on this, said, correction, walk of shame, GBTC outflows were more like 515 million. Still, we're talking about half a billion dollars here. So it's not something, these are daily, by the way. So this is still something to keep a very close eye on. And I'm just wondering, where's the bleed stop? Where does this actually start to stabilize for GBTC? And I think this is going to be the one to watch very closely for sure. All right, so here was a nice chart. This is showing, this was from Apollo Says, just shows the ETF performance. And if you watch this one, it's kind of interesting because you can see the movement of the top ETFs. And you'll notice, of course, Fidelity, the green, Triton there. And then, of course, BlackRock right there at the top. And as it continues to fly through, you'll see that BlackRock and Fidelity are really becoming a two-horse race in terms of total Bitcoin assets under management. So this goes up to around 36,000 in Bitcoin right now, 37, 38, 39,000 Bitcoin now with BlackRock. So just keep an eye on this one. As I said yesterday, and I think earlier this week, is that, has this been the plan all along from Wall Street? I mean, continuing to become the titans of holding Bitcoin and taking that reign away from what we've seen with GBTC over the past few years. Here's another thing that continues to be an issue, and that, of course, is SEC Chair ramping up cryptocurrency enforcement. A few things still in play. They increased crypto enforcement 53% in 2023, highest since 2013. It's 281 million in penalties. Not that that's a lot, but still 82% of SEC's cases against firms and individuals related to fraud charges and 30% unregistered securities. That's the big one. This was another clip here from John Deaton and Meta Lawman talking about the Coinbase case. Listen to it.
A 40% chance for a motion to dismiss. I don't know if you think I'm low, high, or what do you think about that?
Well, I went in, John, thinking 60% before the hearing.
Right.
And then I came out of there certainly below 50, unfortunately. And so the safest course for a federal judge is to allow the case to proceed to discovery.
If Coinbase wins either a partial motion for dismiss or the full thing, what's that mean?
Well, it would be huge. It would mean that trading of crypto on secondary markets in the United States is legal. The 10 or 13 tokens they picked out are representative of the whole. And so that basically the whole community gets the certainty that XRP got thanks to their great lawyers at Ripple and you. And then, anything's possible in terms of new ETFs and the adoption generally within the United States could catch up to all these other countries that have adoption because they have a comprehensive regulatory framework.
Even though the SEC could appeal it to the Second Circuit, when you have tens of thousands of token holders coming in as amicus, and you have all these associations and legal scholars and everyone filing amicus briefs on an appeal for the Second Circuit and certainly the Supreme Court say, we think the judge got it wrong. I don't see it happening in the least. And so I'm with you. I think a Coinbase victory is checkmate in a lot of ways. And
so you heard it right there. I think this is just a matter of time here, guys, that we're going to see Coinbase come out a winner. We had Meta Lawman on here recent with James, and we kind of got to that whole point from his results there at the courtroom. But this also is, to his point, it does affect the rest of the market. It's going to be a big effect too, because he is right. We are going to be dealing with a complete new landscape of not only the blockchain technology starting to really, because remember, this is just for trading. I want you to think beyond just trading and what we're going to see in the open markets. This is going to open up business to this area, because the problem that most businesses have with blockchain right now is the lack of regulatory clarity. When we get regulatory clarity, whether it's through a court case or otherwise, these businesses, Fortune 500 companies, Fortune 100 companies, they are going to start executing on their blockchain strategies. That is going to move a massive amount of projects into the space, which means you're going to see that up curve in terms of adoption. So there's a lot there going. Now, who's going to win that? Well, ETH probably. ETH will be one of the winners, I think, overall. You look at Eleanor Terrett over from Fox Business. When are we getting spot ETH ETF? This was an interview that she did with some of the ARC people. And listen what they had to say.
Well, Bitcoin spot is already trading. When are we getting Ethereum spot? That's all I keep getting. That's all the questions I keep getting.
Soon.
I was just going to say, we're the front of the line on that filing as well. So we're willing to say soon.
Excellent. Oh, really? Okay.
So nothing official.
That's not an official. That's nothing, there's no inside information there. That's our confidence in our own filing and our own.
But I believe it is public that there are applications.
Yes, and our combination is at the front of the timeline on that. That's also public.
All right. So this, of course, was the ARC team kind of going into the whole point is that we do have the position right there with an ETH ETF. Likelihood is there's a lot of work being done right now to get into the SEC approval cycle. Whether or not this actually comes to fruit in May, which is when we have some of the significant dates that come out. But I think all of this has a very interesting timing, having the possibility of an ETF. And also, could we see a rate cut in May? If we are going to get 1 or 2 rate cuts maybe this year, I don't know. It's gonna be a tough one, because I'm still concerned whether or not the Fed really sees our market as needing a rate cut. And obviously with the S&P flying and what we just reported on, that could be an issue going forward. Further into this was Eleanor Terrett kind of hitting on a few points here. And I think that some of these are relevant to really understanding what this means. But let me kind of go in and zoom on this. One Bitcoin spot ETF issuer, this is with an ETH spot application, says they're confident in approval and smooth launch of Bitcoin spots will compel the SEC on ETHs. And then another source says, hey, the SEC at the very moment had a hard no, and there's currently some internal resistance to the idea. So this is interesting as well. Another source says that listing of the ETH futures ETF and BlackRock's track record of getting ETFs approved leads them to believe that the ETH spot could also launch by maybe end of summer. That's a little bit further down line than what we would see in May. Also, remember, Hester Pierce, a very, I would say, pro-Bitcoin, pro-blockchain, told CoinAge this morning that the agency doesn't want to repeat the same mistake of delays with the ETFs. That's the other thing that factors into this, because there were a lot of mistakes, and it also was a little bit of an egg on the face of the SEC, because then they ended up getting their Twitter account hacked. I mean, it really made them look bad. Had they just been able to do this without think about this, who would have hacked them not knowing when they would have released the actual statement? Had they done it 2 days before or a week before, this would have never happened. So that's another factor. So they got to be a little bit more cagey on when they drop this out. Here's TED Talks macro. Grayscale selling will exhaust over the coming months. Then you've got April Bitcoin halving. Let me zoom in on that for you guys right there. Possibly a spot ETF decision. Some people are pushing back towards summer. Could still happen in May. And then June, altcoin ETF speculation, if this is approved. So these are narratives that if you get an ETF under Ethereum, who would be next? Solana, Avalanche, others that would fall into that. An XRP ETF. Many people have kind of been pointing to that. So let me know down in the comments below what you guys think. What would be the next one after Ethereum? Because this would be the one, I think, that would really change the dynamics from a regulatory standpoint and also from an investment standpoint to mainstream. All right, if you guys are not in the Diamond Circle, make sure and get in right now. It's a great place to catch additional content. Catch me on X, @Paul Barron. We'll catch you next time right here on TechPath.